Alright, welcome back to another market review. So today I didn't take any trades and I'll be going over why. Starting from the top down on the daily. Honestly, I'm expecting this previous month high SMT to be invalidated just because of how bullish we have been in this past week. We've literally just been pushing and pushing higher. So yeah, we also hit into ERL, we hit into liquidity. So from here, it would be a spot that would be kind of willing to see price retrace a bit, and I'd be willing to take some kind of short-term sells before looking for continued higher prices because we traded into these liquidity pools. So going back down a time frame, we have a previous week high SMT as of right now. ES and NQ closed above previous week high, while YM did not. And also, when we drop down to the 90-minute chart, we also have a previous day high SMT, with NQ and ES closing above and YM didn't close above. So we have quite a few reasons to look for sells today as a short-term kind of play because of that previous week high and our previous day high. We have no SMT of significance on the lows, both on the previous daily low or the previous weekly low. So then we go on to the previous session high. We also had a session high SMT. Yeah, we had it over here. A wick to body. Anyway, we also had a previous session high SMT. So we had a lot of SMTs looking for price to retrace. On the 15-minute chart, we did get that 15-minute SMT and change in the state of delivery on the 7 a.m. candle, but I didn't enter because that isn't during my trading hours. My trading hours is normally 30 minutes before the first news release or volatility injection. So looking at today, something to take into account, it's the day before FOMC, and yesterday was a very big expansion day to the upside. So today I'm not expecting a whole ton, especially because there's no news. Yesterday we had a big expansion, and tomorrow is FOMC meeting. So yeah. So since I couldn't get in on this 15-minute SMT, I would be looking at a 5-minute SMT at around 9:30 when the market's opened. And if we're talking about targeting for today, I had this is the 90-minute range that I had marked out before the session began, and I was really looking to take it to perhaps this fair value gap in a discount as my target to the downside. Now, one cool thing that I did was I marked a volume profile of the swing leg, and I dropped down to the 5-minute chart, and this is what I could see. So what this tells me is, right here, this also coincides with that 90-minute fair value gap. This is a very, very low volume zone. So the reason why this is important is if the market is truly bearish, it should kind of blow past this low volume zone and go to the next kind of until the next volume cluster. But if buyers are in control, you'll probably see them defend their positions when it enters this low volume node, and price would reverse. So here at 9:30, I was waiting for there to be an entry model to present itself, which it didn't, but price did start moving to the direction I was expecting, and then it hit into this low volume area, which I then began to pay attention to. And we didn't blow past it. We hit into it and aggressively got bought back up from that level. So that shows me that buyers are protecting their positions here, and that buyers are still very much in control of this market. So we shot all the way up here, and up here we created a previous 90-minute high SMT. So even though mechanically, yes, I had all the SMTs on the highs and I finally got a previous 90-minute high SMT, due to my narrative being overall bullish and this reaction of at this low volume zone, I decided to not take it because it just showed me that this is clearly not a market to be bearish in, because it's still very much in control by the buyers. So this gave a little entry here, and then it would have been a loss, a quick loss. So that was a cool little bit of use of the volume profile in this case. But yeah, that's about it. So no trades today. Didn't take any trades yesterday, and then tomorrow's FOMC. So also not going to be super eager to take anything in the morning of FOMC unless it's really clear. But yeah, for the most part, trying to not kind of like give back much of my winning days, because January has been nice. I think I'm up 5% in January. So it's also important to know how to keep profits and when to, in fact, act on the strategy. So yeah, that's about it for today. So we'll see what happens tomorrow.